Good morning, welcome to CATEX TV. Today is the Friday, 13th of February, 2015. My name is Matt Bernat, filling in for Frank Fortunato today. As always, you can follow us for more news updates on our Twitter account, @CATEX TV. Heightened geopolitical tensions spilling over from the Russia-Ukraine crisis, high interest rates and inflation rates, and low commodity prices are placing pressure on Russia's economy and its insurance industry's prospective growth, according to an AM Best special report. AM Best believes the sudden and material increase of interest rates could adversely affect insurers' balance sheets, impacting the value of investments and surplus capital. In the special report titled Insurers Prospective Growth Dampened by Geopolitical Conditions, AM Best notes that despite the current level of interest rates, AM Best rated entities currently remain sufficiently capitalized to absorb the impact of a high interest rate scenario. These rated entities are currently able to absorb the impact of investment losses arising from the devaluation of their fixed income portfolios due to their high risk-based capital and surplus base, the report said. For the wider Russian insurance market, companies are likely to experience losses, temporary or permanent, on their fixed income portfolios as a result of the high interest rates, as investments tend to be concentrated in Russian bonds or other fixed income securities. The report also states that with the potential for further sanctions, uncertainty exists whether the withdrawal of international reinsurance capacity that originates from Western markets, which support underwriting in Russia. Yvette Essen, Director Industry Research, Europe and Emerging Markets, added, "This particularly affects high-value risks associated with infrastructure projects, which are important for supporting Russia's economic growth. The implications of a withdrawal of international capacity could contribute to the contraction of Russia's insurance sector due to the absence of a suitable alternative to support the industry's underwriting exposures." Several independent studies in recent years have predicted that the American Southwest and Central Great Plains will experience extensive droughts in the second half of this century, and that advancing climate change will exacerbate those droughts. But a new analysis released today says the drying will be even more extreme than previously predicted, the worst in nearly 1,000 years. Sometime between 2050 and 2100, extended drought conditions in both regions will become more severe than the mega droughts of the 12th and 13th centuries. Tree rings and other evidence indicate that those medieval dry periods exceeded anything seen since across the land we know today as the continental United States. The analysis shows how exceptional future droughts will be, says a research scientist at the NASA Goddard Institute for Space Studies in New York City and lead author of the study. The work was published online today in the inaugural edition of Science Advances and was released simultaneously at the American Association for the Advancement of Science annual meeting. The colleagues that performed the study reached their conclusion by comparing 17 different computer projections of 21st century climate change with drought records of the past millennium, notably data in the North American Drought Atlas. The atlas is based on extensive tree ring studies conducted by Edward Cook, a researcher at Columbia University. The models consistently demonstrated drought worse than any other time during the era, and the worst drought out west, which had prevailed for 11 of the past 14 years. According to the U.S. Drought Monitor, in 2014, the drought cost California more than $2 billion alone in agricultural losses, according to the University of California, Davis. The models have also revealed that drying in the Southwest would result from a combination of less rain and greater soil evaporations due to higher temperatures. They were not as conclusive about less rain in the Central Great Plains, but all showed more evaporation there. Even where rain may not change much, greater evaporation will dry out the soils. Drought, of course, means more stress on crops and possibly greater water shortages in urban areas. The next step for the group will be to determine when the transition will begin in the next 20 years, in the next 50 years, which is something they are still uncertain about. Minnesota lawmakers are taking aim at insurance scammers. They say flock to the state because of legal loopholes that result in big cash payouts for bogus medical claims. State Senator Vicki Jensen and State Representative Tim Sanders are teaming up on a bill that would beef up the State Commerce Department's anti-fraud unit and heavily fine those found guilty of insurance fraud. To curb solicitation of drivers who have been in accidents, the bill would also institute a 30-day cooling-off period before accident reports can be accessed, with the exceptions for the insured persons, news media, and others. The measure, backed by the insurance industry and law enforcement, is the latest attempt at insurance reform in the state. Previous efforts attempted to ban the sale of accident reports to the public, allow insurers and law enforcement to share information about suspicious billers, a practice now limited by antitrust laws, or limit medical benefits for soft tissue injuries such as sprains. A coalition of personal injury attorneys opposes the measure, contending that insurance industry claims of widespread fraud are overblown. Minnesota is one of 9 no-fault insurance states, meaning that insured drivers, along with their passengers, receive up to $20,000 in medical benefits and lost wages, regardless of who caused the crash. Grifters work the system by staging accidents, then racking up injury claims to receive payments. Others solicit accident victims for pricing unnecessary medical care, then overbill insurance companies. In 2013, Minnesota received 1,700 questionable insurance claims, according to Tim Lynch, Government Affairs Director for the National Insurance Crime Bureau, an insurance industry group. Lynch said the tighter regulations in other states are pushing thieves to less restrictive, hospitable environments. Jensen, who chairs a Senate subcommittee on insurance reform, said broad bipartisan support could mean this year's outcome is different. It's vitally important that this reform takes place. According to the Insurance Research Council, Minnesota ties with Massachusetts for the third highest amount of suspected insurance fraud at 22%. But overall, the state's insurance rates fare well. A moderate earthquake has struck off Mexico's Central Pacific coast with no immediate reports of injuries or damage. The U.S. Geological Survey said the morning quake had a magnitude of 5.2 and was centered about 53 miles southwest of Temautlan. Its depth was about 25 miles below the surface. Officials in Jalisco State said Thursday's tremor was felt more than in 33 municipalities, including the beach resort of Puerto Vallarta. A statement from Mexico's Civil Protection said some schools and government buildings were temporarily evacuated in the area, the state capital of Guadalajara, and other cities. Authorities were checking in on the communities affected, but no damage or injuries were initially reported. The U.S. commercial P&C market remained on the brink of softening in the first month of 2015 after Market Scout's rate barometer measured flat in January. Pricing fell flat in December, ending a 37-month run of rate increases that had been gradually slowing since September 2013, when average rate gains were running at 5%. At the beginning of the year, it was predicted that the next soft market would start as soon as a composite rate decrease is measured. By account size, both jumbo accounts, which are greater By account size, both jumbo accounts greater than $1 million in premium and large accounts between $250,000 and $1 million renewed flat. Small accounts achieved the greatest rate increases of 2%, while pricing was up 1% for medium accounts. By class, January rates were flat for 6 out of the 14 lines of business covered by Market Scout's survey. These were workers' compensation, business interruption, inland marine, crime, surety, and fiduciary. However, the remaining classes, including commercial property, general liability, and commercial auto, were still fetching rate increases of about 1%. Compared to December, rate increases for employment liability slowed from 2% to 1% in January, while price gains for commercial property increased from flat to 1% over the same period. Former AJ Gallagher finance chief Mark Mugge has taken on the role of Group CFO at Sierra Investments Holdings, a vehicle set up by Towergate's prospective new owner Highbridge Capital. Sierra Investments is the vehicle in which Highbridge Principal Strategies will invest in Towergate Group. His arrival marks the second major executive appointment at Sierra Investments from AJ Gallagher. Earlier this month, Insurance Insider reported that Mugge had left AJ Gallagher. The news came just days before this publication also revealed that AJ Gallagher International CEO David Ross had left to become chief executive of Sierra Investments Holdings. Towergate secured and unsecured creditors have signed a debt-for-equity swap in a deal led by Highbridge. Then we'll see the unsecured creditors take an 80.6% equity in stake for a return of capital contribution of about £250 million. Mugge joined AJ Gallagher in 2006 as corporate controller based in Itasca, Illinois, before relocating to London in 2011 to become CFO of International Brokerage. Perils on the 12th of February slightly increased in its fourth and final loss estimate for Windstorm Tini by 1.8% to €286 million. In August, the loss compilation agency estimated the loss at about €281 million. The windstorm, also known as Darwin, affected the United Kingdom and Ireland in February 2014 due to heavy rain and winds of more than 160 kilometers an hour. Tini was the most serious in February 2014. European windstorms also included Nada, Petra, and Ula. Perils initially estimated that at the end of March, the cost to insurers would be about 245 million euros, but later raised its industry-wide forecast to 253 million euros in mid-May. Despite the upwards revision, the Perils estimate for this particular windstorm remains well below the 360 million euro estimated loss released by Aon Benfield's risk modeling arm Impact Forecasting in March. That's the news today. Thank you for watching. If we have any important breaking news, we will come back on and tell you. As always, stay tuned to CATEX TV for more news updates. Thank you, and have a nice weekend.